Welcome everybody to our algo trading AI ideas to actual strategy development in the world of quant and high frequency trading, even because it's so advanced, just the last month. So as I said, this is kind of the same PowerPoint um, that I presented to Moon. I'm gonna kind of breeze through this, but initially, right now, if you're going to do this as a career, you're going to do this even for self-interest. I think it's very important you understand that the asset class to be in is in futures and options. Okay, there's lots of examples I can give you when it comes to arbitrage and how they refer to options and what they trade against or what they will compare against, which is your usually from what I've seen the ETFs. Okay, let's get started. First off, this is myself. I've been doing this for 14 years with a prior domain at quantlabs.net. Also, I have got the new site quantlabsnet.com. And what I focus obviously is on automated trading and quant related strategy techniques. Right now, I've been focusing on C++ and Python, trying to make it as friendly as possible in Linux. So that's where most of the career or the servers are hosted in is in Linux and industry. So I try to match that as much as possible as well. Hey, so this is the important one, the disclaimer. Everything here is for educational purposes only. And that serve exactly that. So there's not strategy advice or any financial advice I'm giving. I have to do that for liability purposes with the crazy kind of people I have come across online. All right, so let's talk about one thing that people may not know about notional value. This is part of the lingo talk in the world of futures and options. So when it comes to notional value, it's basically the total exposure you might have with a futures position or options or a set of positions. And they're measured against an underlying asset that you control, even though you post a small margin deposit. Well, I just saw you at the end. I didn't mention this. Towards the end, we will go through a money management experiment just to focus on micros, just to tell you how big these trades are. Because I had a couple of comments on YouTube. Um, okay, so somebody already asked, what if we're uneducated? Well, that's why I'm trying to keep it as simple as possible. Yeah, Andrew. Okay. Okay, so like I said, I'm gonna breeze through this. I have a whole course on this, but it's very critical once you get into the world of derivatives, where a lot of the hedge funds and the HFT shops and the like, family offices trade, and that's where they play. Then they'll get involved obviously with stocks and ETFs as well, a lot of equity. But with the markets the way they are, they'll be focusing back on futures and options. So what are they? Um, do I really have to do I have to really go through this? Um, yeah, you know what? I'm gonna skip all this because everyone knows all this stuff. Hopefully, I should have mentioned this, but yeah, my AI is going crazy on me. Oh, or I don't know. Okay. Okay. So basically the difference is with a future, it's an obligation to buy something. So you go out and you buy a future contract on oil, you're obligated to buy it and close it out. Whereas with options, it's a choice that you have. You're not obligated to close it. You have a timeline on when to close it out. So you're not obligated to basically uh, close out the position. You can just let it decay by a time. And then this is the important one because most people, including me, are going to be focusing on because we're going to have tiny accounts here. Once you get into this line of these type of areas in futures and options, you're going to be usually in the hundreds of thousands of dollars. So if you're going to try to be like an HFT shop, their position size is going to be probably in the millions of dollars. But the cool thing about futures and options, because the CME, the Chicago Mercantile Exchange, want to bring in retail as well. So what they're going to want is to have different tiers of different contracts. So you have micros, which would be 1/10 of a full contract, or a mini, which is 1/5 to 1/2 of the notional value of a full contract, depending upon what you're trying to trade. All right. looks like I have hit the buttons I'm not supposed to touch. Bad me. Okay. So here's some of the advantages of futures and options versus equity, stocks and ETFs. So as it says, there's higher capital efficiency when it comes to both futures and options. There's better tax treatment. You can trade 24 hours, 5 days a week, and there's pure asset exposure. Okay. So when it comes to options versus equity, you have a defined limit. You have a defined and limited risk. You also have strategic flexibility, and you have cost efficient leverage. That's the important thing here. Well, as I said, we'll go through the money management, which I didn't do at the Moomoo presentation in July. And then here, if you're selling options, you have income generation as well. So the advantages of futures over retail forex is, well, you're dealing with a centralized and regulated exchange. If you're trading through like a retail forex broker, we already know that they're going to be corrupt. They're going to be trading against you, blah 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 blah. And then also with a futures exchange or CME or an ICE, you'll get real transparent volume data. The other thing is you're not taking on any counterparty risk, and also there's standardized contracts as well. Also, other party risk. I don't know. We can go over that at the end, Andrew, for specifics. Yeah, that's right. The exchange takes the risk. Yeah, it makes sense. And there's also the clearinghouse that processes the orders as well. So that's part of that. So the advantages of options versus retail forex. So this is really specific to my meetup group for Forex. If you're trading in retail Forex, these are the advantages of trading in options and futures for currencies. So here you have a very limited risk you take on when it comes to Forex or currencies on futures and options. You can profit also from the volatility in time. There's no obligation to the buyers within the options space, and there's broader market access as well. So, like I said, I'm just whizzing through this because I know people are just dying to see my code or to see my demos. But I have to go through this for the beginners. Okay, so this is the important one from all you crypto fans, Bitcoin, Ethereum, and that. Um, so with futures over crypto, you get highly regulated and secure. Because I've been on Binance, I've been on Kraken. There's a lot of coins on there that that are the bleed coins. You get better and simplified short selling. There's no wallet or custody needed, and there's a lot better capital efficiency as well. So advantages of options versus crypto. Okay, that was prior. Sorry, that was prior to the futures. So here were the options versus crypto. So you have a defined risk in a volatile market. If you see my past demos, crypto is very volatile, which I'm not saying don't trade or not, but there's ways in the institutional, that one of the videos it talked about what to look for on chain on when the big whale traders are ready to move, and then you have to watch these kind of metrics to really see when Bitcoin or Ethereum is about to move. The other thing with options versus crypto, it's regulated, which I guess is better in a way. The strategies can be a lot more sophisticated, and there's no self custody that you need to worry about. Okay, so we're going to go through the CME list. This is important to know, okay, because we all hear about the stock market's ready to collapse or have a major correction. Here in the futures market and options market, there are going to always be instruments that will always profit no matter what. When the world burns, there's still going to be trading, especially in the futures and options. I mean, golly gee, how long's the CME been around? 100 plus years, and that's through a couple of world wars and global depression, and it's still standing. So, first thing is over 40 instruments on the CME. I like to look back about a year. Um, there's option chain data, which is the real crust of the whole 9 yards of this, because you can have option chain data will give you outlook of 1.5 days. all the way out to 1.5 years. Optimally, you want 3 months. When it comes to the cost of option chain data, specifically what they call futures on options, the option chain data can be roughly, if you're going to go to Data Bento, at $1,400 per month. I can meet much higher, and that would be a full 1 year contract as well. So it's very valuable, very expensive. So basically, what I do is I create Word documents from all these different instruments. I'll kind of go through that in greater detail, but things are kind of changing with what I'm discovering and what the more recent developments in AI can provide. So here's a list. So we have equity indices. So we have the S&P 500, we've got NASDAQ, we've got Russell, S&P mid cap, and the Dow Jones Industrial Average. Then we have the metals, the typical gold, silver, platinum, palladium, copper, aluminum. These is just specifically from CME. I heard a voice there. Anybody? No? Okay. Energy, we have Brent crude, WTI. We have natural gas and gasoline futures as well. Then there's this little micro list of agriculture. I'll just say here in agriculture, this is where things will still kind of profit because we all need to eat, as I always say. The big ones are going to be soybean, corn, and out of that, there's always one that's going to do really well in the worst kind of markets. Could be coffee, could be cocoa, could be orange juice, and they do really well over a certain period of time as well. Then you have this is a really big one in the space of just the financial world, especially when it comes to banks, is a treasury market with the different durations of 5 year, 10 year, 30 year, 2 year, and then the treasury bond as well. This is a crucial market that everybody's watching to see, which could be the catalyst to take down a lot of things in the market. Also, obviously, the CME and the like have kind of updated themselves to add on crypto. So they have the Bitcoin reference rate (BRR). They have micro futures as well, and micro ether as well. Plus, they just added this year Solana and XRP. I'll be tracking that later in the year because, as I said, I like to have a 1 year analysis on my look back, and because Solana and XRP are fairly new, I'm not really analyzing them as much yet. Then this is for all the retail Forex. So we have the big ones: Australian, Canadian, Swiss franc, US dollar, the DX, Euro, British pound, yen, and the New Zealand dollar as well. In there, I don't see the Mexican because the Mexicans kind of been moving lately. All right, so let's take a look at how I do the analysis and options. Remember, this is what I presented back a year, not more than just over a month. So this is radically changed now. So basically, what I do is I'll test the market condition and do a volatility assessment because a lot of the analysis you do in the world of this is basically analyzing implied volatility, which is really critical because that's the future outlook on what the volatility will look like by doing a bunch of calculations on the option chain data. We try to establish a long-term contract and maybe use an annual volatility rate. As I said, we use implied volatility. We gauge basically a future expectation using implied volatility. And then another ways we can do this is trying to assess market sentiment as well, which is another big factor. So as I said, I've got a futures and options course that kind of tracks this. This is just the start of it when it comes to true quant. What we're looking at are things like, and as I said, this is the foundation. A couple of things when it comes to options and futures. You want to do hedging. You may want to do arbitrage, which are two classic ways to do this. You're going to maybe want to figure out what your optimal hedging is. You want to find things like the effectiveness of basis rate or basis risk as well, which is the difference between your cash price, which is a spot market, and the futures price. So a really good example of this is with the futures, you're going to put a put option, and that demonstrates that that's kind of like setting a floor price, and that protects against the potential future decline that you anticipate. So you can combine different types of strategies to profit on, as well as to protect yourself. But this is what the AI, the Chinese DeepSeek AI, revealed to me as one of the secrets is that yes, the insiders know this stuff. That most retail traders, most we'll call them not so smart money traders, are going to be using these type of metrics. So what they'll do is they know that and they will play that against you. I might be able to show you some examples, but as I said, if you watch my three most recent videos on YouTube, Quant Labs, you'll see what I mean and what it reveals. It's fascinating. So then when it comes to options, which is mostly of what's traded versus futures, there's different types of specific analysis and strategies that come out of it. Um, you could kind of, if you're doing it as a human and less about um, algorithmically or systematically, you're going to be using things like a payoff diagram for the visual. There's different ways to analyze. We're going to calculate your premium and try to calculate the difference between intrinsic value versus time value. And now that, as I said, it comes these complex option strategies. So with an advanced AI, it can, and as I said, this is the point that's new here since the end of July, is that the AI can reveal industry trade secrets, which I said were from my last three videos. Okay, so one of the key areas in which high frequency trading shops use is classic mispricing opportunities. So that could be put call parity checks. And there's different types of ways to analyze that. Or the other way is to measure the cash futures arbitrage. And there's so many different ways to do arbitrage out there. So the whole idea here is there's different ways to predict the markets. One of the classic one is using this quantitative technique with the ARIMA model. It's a statistical method for time series forecasting. But if you use more of the advanced modeling or AI, it will reveal all kinds of things that we don't know about. But it will tell you if you know how to prompt it properly. So what we do here is we look at all the different Word documents that are generated from that big long list I just gave you of all the different types of instruments. It's over 40 of them. So we analyze all those different instrument or sort of those Word documents or reports, as I call them, and then I feed them back into an AI to say, hey, give me an executive summary here. From there, what it does is going to generally gauge overall market risk and the environment of where it's at. And that's because of option chain data as part of that analysis. So out of that, what will happen is you evaluate and construct optimal hedging strategies. You can also put together a portfolio construction of what top performing instruments can be. It depends upon how much you're willing to allocate. And then from there, we can dissect different types of option positioning. We could do that via Greek analysis or evaluating the metrics. There's so many ways and looking for things like price behavior and whatnot. The idea here is we're looking for structural and being able to identify that structural potential trading opportunity. And that can be very complex, different types of strategies using quantitative techniques along with arbitrage as well. So I presented this with to the group back at the end of July. I do strongly feel that this does work, but what I'm finding is when I do the back testing, there is a general profit equity curve or profit line to a lot of the combined instruments, and you'll see that in this one Streamlit app that I'll have. But generally, how it works is instead of me looking, I'll have an outlook of the next month with the way the markets are, and depending upon your goal of risk and how much you're willing to take on. Um, I'm finding that what it forecasts is usually the timeline is no more than a week. After that, it either starts to decline in terms of the profit potential after the first week, or it could actually uh, just kind of flatline after the first few days. So the snapshot you get, that opportunity may exists for only about 3, 4 days or up to a week. That's what I've been finding for the last month, we'll say, because most of the markets have flatlined. There's some markets have done well, but the volatility is kind of a lot higher because we're getting close to that catalyst where everything's going to correct. Okay, so as I said, this is not going to be valid here, but when I presented it to the group at the Moo at the end of July, what I was doing is I was looking at silver and cocoa that was identified with a bear put. I'm going to show you what this new one does, which was generated yesterday. And this was generated. Now you can see here it's using Claude 3.7 reasoning, where it does the final correction of some of the bugs, we'll call it, when you iterate the actual script. Again, this is Python generating a Streamlit application. You could use a Qwen 3 coder to correct. We are now updating everything. All the market insights right now are using DeepSeek 3.1 because of what I said of some of the quantitative techniques. You'll see some of these secret institutional things on some of the stuff I'll show you. It's beyond fascinating because nobody out there in the online world talks about it. And right now, I'm also using, I hate to say, oh, I'll say in a good way. ChatGPT 5 has come out 2 weeks ago now, and it's incredible. I mean, the quality of output of the code is really good. So that's what I'm using to generate the code, along with the more up to date Opus 4.1, which is part of the Claude family from Anthropic. So those are all the different LLMs that I'm using. All right. So what we have here is we're looking to generate an engine or an application that'll showcase all the um, different presentation of back testing. I'll show you that in a minute. This is much more updated, and that was only in the last month. The pace of everything is just incredible. This is the last month, even the last week, it just AI accelerates. So if I was to do the same presentation next week, it'd be totally different from a week from now or 2 weeks from now. It's hard to keep up in terms of updating it. But the big one is the quant trading secrets are out there. Okay, so I'm done with that. I didn't take too long, almost half an hour, unfortunately. So if you guys got questions, let me know. As I said, I've got my chat open. Um, I see here that Andrew's got a bunch of questions as well. What I'll do after this is I'll move it out to the Streamlit apps and the C++ as well. If you guys want to see that as well, just let me know. Otherwise, for now, I'll take questions on what I presented when we leave it at that. Anybody got any questions? If you want to unmute yourself, or thanks for being patient for that. Anybody got any questions? Otherwise, I'll just go right into the demo code, which I'm sure a lot of you may want to see. Okay, let me just free up some real estate here on my screen. Okay. Okay. So, how I work, I'm going to explain the technical nitty-gritty how I do it. Right now, I'm on Windows 11, obviously. I absolutely love Windows subsystem Linux distributions, so WSLs and WSL2. Um, so for now, I use that, and I'm using Ubuntu 22. I'm just too lazy to update to the latest. I don't see the point of it anyways, because what I use doesn't make matter if it's Ubuntu 25 or Ubuntu 18. It still runs for me, and that's fine. Okay, so let me open up those terminals I've got. So let me see here. As I said, anybody got questions before I run this demo? This is the part I was not able to run at the end of July. So that's why I like the online. If not, okay, let the games begin. So we're running a Streamlit app. It's a different framework for front ends when it comes uh to to uh to Python. So up comes the browser. Ooh, there it goes. Okay, it's loading up the app now. So again, everything I'm showing you, everything so far is 100% AI. Okay, this is one of the reasons why I use Streamlit, because it just, the way the AI is and you ask for it, it usually gives you extra things that you didn't ask for, but it gives you extra things that are really, really powerful. So here we are. This is a snapshot of this particular portfolio. And basically, from the AI that I've used, um, there's different instruments in here, but this is how I do it now. So in here, this is the equity curve on the back tested. So if I had 50,000, what's expected, I might get 160 bucks. That doesn't sound like a lot, but again, the reason is because it's focusing on low volatile instruments. So because of that, and you get a higher probability of getting the profit as it says, you can expect that because based upon this this price line of the combined instruments with the combined strategies applied. So right now you can see the Sharpe ratio is fairly, 0.91 is not bad. And here's the P&L, okay, as well. And there's a P&L distribution and da 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 da. Um, so this is kind of new from what I presented a month ago. In here, we've added daily profit. We've looked at expected return, which is not very much, but I'll show you how we can boost it. Also, we've got our max drawdown. So from a money management or risk perspective, you want to obviously not have your drawdown no more than 15%. That's kind of like if you were talking to a portfolio manager, that's usually the metric that they'll go with. And obviously, the lower the volatility is better as well, because when you look at crypto, you'll find that the annual volatility rate of something like Bitcoin, Ethereum is going to be about 50%. So that's a problem, okay, especially from a portfolio perspective. Whereas if you trade currencies or gold, silver, the um the volatility is much lower. Any questions on that? I hope I'm seeing people asking questions. If not, just unmute yourself. And then here we go. So part of the prompting when it comes to what I do, I look at weighted allocation of a general portfolio. I also look at what type of strategy is going to be really good for me to maximize the profit. So as I said, the profit here is really low. So out of what's been analyzed and how I prompt this, and part of the prompting is, dear Mr. LLM or Mrs. LLM, please show me all the potential unknown secrets that the institutions are using, so I can apply those specific strategies and boost my potential profit. This is what it comes up with. Well, there's statistical arbitrage. You can apply 30% of it to your portfolio. You can apply a volatility arbitrage as well, and pure arbitrage. So back in the day, you would see things like straddles and iron condors. You're not seeing that in here, and there's a reason. It's because this is how the HFT shops trade, using these type of strategies. And again, how do I get these type of strategies? Well, because the AI told me so. When you ask it the right way, specifically on something like DeepSeek. Okay, so there is that. So the thing is, uh, here is where it gets very interesting. We have a strategy analysis. Okay, so one thing I can show you here, this is the positioning. Okay, and this is totally different from what you're used to for your entries, your exits, your trigger points on different positions. Well, what happens if you use a Z score in your mathematics on your position? Or what happens if you use implied volatility? Or if you want to use an iron condor and you use something called an implied volatility rank and it's greater than 70, you can apply that as either an entry or an exit as well. So all of this is capable of what the AI will tell you based upon the data that you feed it. So in here we got statistical arbitrage, iron condor, calendar trade, a strangle, a put call arbitrage, and a basis trade. So the basis trade is a pure futures only trade. And this is why I try to stress that you don't find this in stocks, you don't find this in pure Forex, retail Forex, or crypto. This is using on the CME futures and options. Okay. So this is what, again, the industry is using as part of their strategies that we, the retail folks, won't really know about. And this is a snapshot that it's putting together to maximize your profit. So I'm just going to walk you through this. So here is our instrument analysis. You can see here, this is the proposed positions, okay, with the future price, the cash price, which is the basis, and here's your apply uh, your potential forecasted volatility through implied volatility, your rank, your IVR rank, and then of course your signal from that. This is where it gets interesting. What I focus on is if you want to doing this for the last 6 months, what you want to do is you want to maximize your profit potential. So usually what I do is why would I want to have the US dollar in here, the DX, when the return's not so much? Or even this one, the Australian dollar. So my point here is you strip out all of these, I mean, these are profit potential instruments, but you want to add in only the ones that will be maximum potential. Okay. So that is right here. You got KC and NG, which is natural gas. Okay. And those are the ones that I kind of focus on. And I believe oil was in there as well. Yeah, oil is number 3. Okay, so that's an important metric to know. Now, here you can add in things like these correlation matrices. You can add in the basic basis analysis. And again, the basis analysis is the difference between the spot price or the cash price in the market and the futures price. Okay. So it's just another way to do this. But I'm just going to whiz through all these different applications. So, yeah, let's just see what we got here. This is another important one. I've said this time and time again. People will spend days, weeks, and months on backtesting. I just don't see the point now in the world of AI. If you prompt it and say, hey, do a back test on this data and give me the analysis, okay, that's all you need to do. And it's going to do it for you. And you present it in this case, a Streamlit application. And this is what it presents. Gives you all the necessary metrics. So again, remember, I've gone in, I've generated all the futures data for the last year. I've generated as much and best as I can when it comes to option chain data for all those 40 instruments. I feed that into an AI, and then it comes back with the best potential forecasted instruments and strategy types that I should apply. So here you can see with currently the way it's set up, I could have a win ratio of 53%. If I did this at the beginning of the year, I'd have a year-to-date Sharpe ratio of 1, which is okay, with a return of 7.65. Again, this is not including stocks right now. If you look at the S&P 500, you're roughly looking at about 9%. Here we're at 7.65. And this is the important metrics that a lot of people want to see is your max drawdown of no more than negative 12%, which is pretty good. Still within that 15% standard. And then here you get more into the quantity institutional level of value at risk and the conditional value at risk as well. And then we get into more of the option stuff like skewness, kurtosis, and what would your best day be intraday on performance. This is new. This is just added in this analysis because I'm now using the Opus 4.1. So here it's giving me an overall for the last year, okay, on what month would give me the highest return and what strategy here. So you can see here, if I did this in December, I could expect a 22% with the current portfolio I've got. As we're moving into September, it doesn't look that strong. So maybe historically, do I apply a 3.9? So if I'm going to get 3.9% on a stat arb, should I focus on that or should I focus on the uh, volatility arbitrage? So in my case, I went with the volatility arbitrage. You'll see that in the C++ program. Any questions so far? I hope people are still there. One thing I'll say when it comes to this sort of thing, these are the sort of metrics that portfolios will look at. Portfolio managers, if any position to get into these large trading firms, portfolio managers are the best. Why? Because if you've got a solid track record, they will use that. Usually, they don't care about your education. They don't care about how long you're trading. They only care about your track record and it has to be verified. So if you go in with these strong kind of metrics in a verified track record, you can then become top dog in various different teams if it's quant based, if it's systematic based. And the top players in London, let's say, and I've always used this metric, it really stuck with me. Highest paying folks in any firm is usually the portfolio managers. Why? If you look at Goldman Sachs, the average income, average annual salary at Goldman Sachs for a portfolio manager is $9.5 million in London. These are the top paid people, okay? And they don't care about your education. They only care about your track record. So this is why I stress this so importantly that these are sort of things portfolio managers will look at from the surface. And now we're going from a human discretionary portfolio manager to now what they call an AI portfolio manager or systematic portfolio managers of some of the positions I've seen lately. Okay. And they get paid millions of dollars no matter what's going on in the markets. If you can show consistent profit, you will be paid very, very nicely. Outside of that, rent, the historical backtests, these are the top surface metrics that a lot of portfolio managers use. The other things, obviously, risk management. This is interesting because the advanced AI is now giving you all the metrics on your daily value at risk, your position limit, your strategy concentration of the different types of strategies here, and your delta exposure as well. And this is all, now, let me repeat. This is how they look at it from a quantitative perspective, not retail trading, not, this is how they do it. And then they also go deep into the Greek analysis as well. Okay. And they measure, more importantly, if things go bad, what's the impact going to be on a daily basis? This is another area I've kind of talked about, but here it's verified what I always thought. And again, this is courtesy of an AI. We're going to work on our stress testing on different scenarios. So we factor in what's going to happen if we have a market crash, if volatility spike, an interest rate spike, or flash crash, or black swan. What's the impact going to be on our portfolio? What's the probability of it going to be? And what are the ways that we're going to be able to mitigate it within this overall strategy to protect ourselves under these different conditions? Again, this is all from the AI. I didn't go to school for this. This is all from the AI, right? So then obviously you can evolve your risk on the overall portfolio. And I've asked it to only do the next 30 days. So you can see here, it's kind of safe. And this is the sort of way on how these portfolios think. And the only reason I know that is because it's coming from DeepSeek. If I pass this in any other AI LLM, I don't think I'll get these kind of metrics. Okay, let's look at the other things. Strategic configuration. So here you can play around in this little app by setting your entry points on your Z score and all that fun stuff. Okay. Your look back, your different pairs, blah blah blah, all the different risk metrics as well. That's what they look at. So that's pretty well it. And as I said, when you suss all this fun stuff out, you generally want to see what is the best strategy to apply that will give you the highest return on a forecasted basis, not on a back tested, on a forecasted basis. So in here somewhere, I know there's a chart here somewhere that's going to show quite likely the statistical arbitrage will be the best. And you can see here, I can make these all clickable. So when I do that, if I do this and this will usually show me that yes, the volatility arbitrage is going to give me maximum opportunity in the two highest potential returning instruments, which is going to be what was it? Natural gas and KC. I think that's corn. Okay. So enough of that app. Who wants to see C++? Anybody? Anybody? I think we're losing people here. That's okay. Maybe it's over them. I don't know. All right. So any questions so far about this app? And again, this is AI generating this. Anybody? By voice? By not sure. Okay. So let me go on to the next one. Okay. So if you saw me at the end of July, I use a Streamlit app for, we'll call it research, doing the strategic analysis, just playing around with all those metrics and parameters that I showed you. Okay. So that's that's that. So that's for research purposes, we'll call it. So now I code everything up in C++. Now purposely I don't I have not plugged in this to the, in my case, interactive brokers plumbing. Uh, and probably people are asking why not Moo. I won't go into that, but they don't do options like this, like the way interactive brokers does, and they don't have the language support like interactive brokers does as well. Um, so anybody out there want to see some fun stuff when it comes um, to C++? So this is kind of like demonstration of a pricing engine, as I call it. So it's taking all the information that I used and I asked the AI again, and this is now via two LLMs. As I said, ChatGPT 5 and Claude 4.1. And both of them are two totally different outputs on the C++. What I find with the ChatGPT, it's very good at low level algorithm development. But if you want something a little more, industry will call it mnemonic, meaning it's more readable, you want to go with the Opus, the Claude. That's just the way it is right now. Things can improve and change in the next day, but that's the way it is right now. Okay, so let's see here. Okay, so I'm going to show you the Claude one. Okay, the other one, it, again, there's these AI things that when I put a request out via the prompting, it will automatically assume that I want to do a clustering via NVIDIA GPU and it runs a simulation before it does anything. And because I'm running it on a simple little laptop, it take a long time to run. So I'm just going to focus on this app. Here we are. So its first thing it's going to ask me is how much money do I want to put in? As I said, we're going to, one last section, like I didn't say to people, is we're going to talk about money management on this whole thing. So is that Andrew, that menu? If you select number 3, yeah, I'll show you everything, Mr. Chalk. Okay, so this now is we've now applied a $50,000 allocation, but I can tell you that is going to not going to be enough to do this, and I'm going to show you how. So it's going to focus, as I said, on natural gas and coffee. That's what the AI has come up with that will give us highest potential return. Okay. Hang on here. Okay. So this is where it gets real fascinating based upon the prompting. So in the natural gas, we're going to do an iron condor, and I specifically ask, please give me the trigger points for both the exit and entry using anything that institutions will use as a metric for the triggering points on the entry and exit. And I'm going to show you what it came up with. So here it's going to sell 15 delta call puts by 5 delta wings. Like, I don't know what that means. Target 50% on max profit or 21 DTE, days to expiry. 21 days to expiry. Here's the risk that we, retail traders, either don't have access to the data or will never see. We have to watch for weather events and we have to watch storage reports. Wednesdays at 10:30 Eastern Standard Time. The edge that we get is volatility typically contracts after inventory releases. That is what the institutions don't want you to know. but DeepSeek tells me that. Coffee. Now we're going to do a short strangle. This is a volatility premium capture. Okay, so the first one is a volatility arbitrage, and this one on the coffee KC volatility premium capture. 30% volatility it projects, highest among all commodities. If you consider, no, it's much higher than that. So here, what we're looking at is doing a sell on a 20 delta strangle with an IVR, implied volatility rank, at greater than 65%. We have a delta hedge at approximately $500 exposure. Again, that's using the Greek analysis. And the things we're looking for here are Brazilian weather premium, typically overstated, and where our edge is the harvest volatility compressed between May and September. Again, things we wouldn't know. What is the till exposure at that delta? Good question. Maybe this is the sort of thing I like that's condensed in this app. But if I was to ask one of the AI LMs, I could give you that answer. But this is so advanced. I've only been studying this for a week, so even if I took a guess at what you're trying to ask, I'd be like a fool, like to with the answers. What is the dates till expiry at that delta? Oh, I see. Let me just say this. This was done last night, so if you're referring to dates, I'm not sure if that's a typo. Um, so the expiry would be for 30 days, okay, or the position not look, but the window of trading or analysis would be over the next 30 days. I don't know if that answers your question, Andrew. If it doesn't, let me know. Just type another question. I'll do my best. But I'm just trying to show you some of the highlights here of what this power can give you, knowing how to prompt this. So here, these are the institutional secrets. Okay, this is what they're not going to teach you at schools, not what they're going to teach you at some online thingamajiggy. Because nobody knows about that. Only the trading firms know about this. So a couple of things we're going to look at. Calendar rule arbitrage. NG front month decay accelerates last 5 days. Okay, that's what the industry knows. Cross market strat hedge, where NG and CL ratio trade when correlation breaks. Okay, so the only way to analyze these sort of things that you can use as part of the risk analysis, you can build an AI to do all this, or not build a program to do all this, as long as you have access to specific data it's giving you. Here with the coffee, we're looking at the KC Frost Premium between June and July, because that's the winter in Brazil, where the calls systematically are overpriced. Again, that's the AI telling you that the industry knows or the institutions know, but again, the retail crowd won't know these things. Storage arbitrage. NG contango trades during injection season. Again, I don't even know what that means. You can look it up by doing AI queries, whatnot, through ChatGPT or whatnot. But this is all new to me as well. New to you, I'm sure. I'm just showing you what the industry knows from probably the decades that they've been doing this, but they're not going to tell you that. But these are the secrets. Weather model alpha. So again, they're going to get access to the GFS ECMFW data sets that they pay for. Some of the data sets that are DeepSeek was telling me are 2,000 a month, 10,000 a month. So these firms are paying big money for this data, the smart money. This is what they're doing. They're paying thousands of dollars a month, probably hundreds of thousands of dollars a month for specific data sets every month to be able to use this type of analysis that we will not get access to. Okay. Um, and then, of course, there's the risk warning. Instruments subject to extreme tail events, maintain strict positions, sizing, 15% of your total portfolio per strategy. So if you got $1,000, you're not putting more than 15% into any of these strategies, which would be obviously KC, your coffee, or your natural gas. Okay, so now that we're made aware of all these fun things, let the games begin. So uh, Andrew wanted to see number 3. Well, let me just show you. I'll go through it in numerical order. So here is, again, this is all simulated. Okay, this is just for demonstration purposes. Again, not financial advice here. So you can see here, simulated data is saying, here's your future, here's your cash price, here's your basis, and here's your volatility rate. And it's telling you out of all of these ones potentially which ones you could buy. So Australian dollar, crude oil, natural gas buy, and coffee you could buy as well, I believe, and corn, and selling the other ones. That's pretty cool. That's pretty cool if you ask me that it can do that. Let's go to the next menu option. If you got questions, let me know. All right, so let's do number two. So this is the potential portfolio here. Okay, so here we've got, as I said at the get-go, we had $50,000. Uh, we're trying to measure a daily profit loss, and then we get our standard industry metrics of Sharpe, value at risk, and volatility. Let's see. Okay, I'm just trying to check on the chat, see if anyone's got questions so far. Not seeing anything. Okay. Let's see number three, which is what Mr. Andrew was asking about. So this is our trading signals. Again, this is not hooked up to any form of real market data, but I could do that and just add it as part of a prompt on when this thing gets created in C++. So here we have a volatility arbitrage. Um, I believe if this is on natural gas, yeah, natural gas, it says enter a short. It's 87% confident on this call, expecting a 0.37% return. Reason because the high IVR, applied volatility rank, using an iron condor setup. That's pretty cool. And then on the natural gas, again, natural gas, it's saying enter long with an 86.6% confidence uh, rating with expected return, not a lot, at 0.01%. I think it's 1.7%. Uh, yeah, has no, it's 1.7%. I'm not sure if that's measured over a day. And the reason because the basis arbitrage is 1.7%. Again, that's kind of explained in the course. But this is sort of the outlook that this thing's generating right now. If I was to hook it up to real market data, let me know if that answers your question, Andrew. Now, another thing I talked about when it comes to analysis, a lot of the um, Greek analysis is done. So I could use this kind of app that's created by, again, AI and measure in real time the impact on using Greek analysis. And then it will also measure the daily impact on that portfolio as well. Okay, so sometimes, as far as I know, again, I'm just now acquiring little data on what the institutions do. They have something called a gamma exposure that they really focus on. So that's the big one that they would focus on. Retail typically focus on theta because it's time decay. But as you dig deeper with DeepSeek, you can learn what they do with this gamma. And there's also something out there, just so you know, that institutions term momentum ignition. So what they look for is they're looking for things uh, with with momentum ignition. And there's all these different secrets that they know about that they won't tell you because they are looking at these unique data sets or data sets subscriptions that we either don't have access to because it's too expensive or we just can't, we're just not aware of them because I hate to say we're ignorant at it. Okay. So we can execute a manual trade, big whoopee. We know how to do that. We can toggle on our auto trading or not. Again, features that the AI can generate for you. In this case, it's Claude. And then again, we can look at comparing our strategies to see how they're doing. And then I can go further into the metrics here. Um, and which one? Oops, sorry. Yeah, sorry, that was configure strategies. I'm sorry, not compare. You could configure strategies here. And as I said, you can, in this case, of how it's generated, you can kind of override it from a kind of a client, a CLI perspective to manually turn on certain um, strategies, or if you want to change your entry and exit parameters based upon your Z score or your IVR threshold, as I said before. And again, it's not an by the Bible here what I'm talking about. These are options that the AI gives us because we are using highly advanced techniques from the prompting with the correct LLM giving you these kind of applications. Okay, so let's go back to our menu here. We've looked at here, configuring the strategy. Again, we can start a live trading simulation. And then we can also look at, let me just see here, our order history as well. No orders accepted, started. So here I did ask for a simulation. I haven't done this before. Let's see, start live trading simulation. So I guess it's going through and it's going to time out with all the different signal generation I've always shown you. Again, this is all simulated, but this is very advanced. I've not gotten it to this point, and again, using a lot of these techniques that I've not seen before because of the newest version of DeepSeek, which came out like I think 2 weeks ago. Okay. And this always changes based upon the type of market data I present it and the kind of prompting I do to get the kind of output on both the Streamlit app for the research and eventually it makes its way into this, call it pricing engine as well. And again, this is all done in C++. So if I was to show you this, here's the C++ code as well. I'll stop for now. Does anybody have any questions? I can show you the pieces of the README files for both C++ files if you want to see it. Um, there's also the strategy itself that's documented. I believe no, I haven't put that in here as well. But you kind of get the idea from the Streamlit app on the kind of market condition in as a snapshot when this was generated yesterday. Sorry, was there a question? Go ahead. Go ahead. I don't know if that was for me. Okay. Um, yeah. Okay. So, any questions on the C++ stuff? And this is one big key I should mention here. If you're a C++ developer, typically when it comes to the how firms use it, a lot of the trading firms are going to do first. They strip out as much of the dependencies as possible. They're only relying on the standard template library, the STL, and only that. And the other thing is, when you do that, what will happen, you're forcing the AI to create the algorithms for you, the models and the algorithms and the strategies. So you're forcing the AI to do that. And because of that, if you're doing this for potential career, what you can do is when you start looking at the source code of these C++ files, you would start to reverse engineer how these get generated. Because in my last video that seemed to tick off some guy, some insider, he was really, it seems he was really ticked off at the fact that somebody on here, and I thanked them a lot for doing the quality or doing the checking the quality of the code that's generated. And I'm not saying it's near perfect. I did a whole video on it, near hour about it. But my goal here on these files is I try to get them to a runnable state with no dependencies. And yes, of course, they're going to get criticized because they're not modularized and all that. But I do that on purpose because I'm trying to keep the code efficient, high performing. So the other big tip I want to say is you want to remove all your dependencies as possible in your build, and you want to force the AI to, to generate the mathematical formulas for you for reverse engineering. About this is not about convenience. This is about looking at code and getting code at a high performance level. Um, it's just part of the process to get this code as fast as possible. I mean, there's other techniques through meta programming and stuff, but it just comes down to prompt engineering on the right LLM as well. And as I said, it's going to be right now either the Claude and somewhat for now the GPT-5. I've tested a lot of things. They're not quite there yet, but every day something gets better. It could be a free LLM. It could be a paid LLM as well. Any questions on that sort of stuff on the C++? And one other thing to tell you how long from the scans it take in terms of when you prompt something like this with 4.1 Claude Opus, it can take up to, from what I've seen, half an hour to an hour to run. That's how intensive it is. So I can imagine it can be a lot of a lot of utilization in their data centers to generate this kind of code because there's a lot of logic that's being generated by the AI. So it can be very expensive. And when you come to iterating it for all the bugs and exceptions, that can be expensive as well. But what I'm seeing is the good thing is with the more advanced AI LLMs is they're getting better. If it was 2 months ago, it takes 6 iteration cycles to get the code runnable. Now it takes no more than two. It's gotten that good, but you got to be willing to pay for it and know how to prompt it properly. How many? Oh, I don't have any NVIDIA hardware at all, Andrew. This is all done through the servers. Sorry, through cloud. The thing, if you're building your own rig, it's kind of like a waste of money. And why I say that is because you can have a $5,000 rig with all your NVIDIA and stuff, but like the difference between probably just alone on DeepSeek, um, it's gonna within that next version, that next iteration, that's not a major one. It can pretty well make your hardware not have any it keeps it outdated very quickly. I don't know what the is that a sad face? Let me know why. I'm just finding the experiences you want to run it through a cloud, through their services, because they're the ones handling all the hardware. You're just putting a request out, and then you get back a result. If it's code or if it's a text or whatever, there's less resources on your end. You just got to pay for it. People don't want to pay for this, but the output to get where I'm at now, by hand coding this by some mathematical computer programming whiz with a PhD, this would probably cost a couple hundred grand of their as an annual salary, let alone how many weeks it would get to this. And as I said, I can generate these within an hour. This is my view, and that's really my experience. What I'm finding. And no, you can't really do this through the free stuff. You want the really high quality, which is the end goal. Yeah, you got to kind of pay for it, and it's not very expensive, but you kind of got to pay for it. Any other questions so far? Okay, so I'm gonna get back into the trading mode as well. This is one that's really important to understand, and people go, "Why don't you trade? Why don't you start trading all this stuff?" Well, let me show you how expensive it is, how much of a high risk it is. Okay. So I played around with ChatGPT. I fed it the C++ file, so it got access to all the um, trading logic and strategies and all the algos that came out of it. And I basically asked it, how much would it cost minimum exposure to make a trade happen on the CME through interactive brokers? So it came out, and now I'm only using micro and a mini. Okay. I'm not using full contracts because remember, you can multiply this by 10 or multiply it by, in this case, it'll be 2. Okay. So first things first is there's an NV natural gas micro, which is 1/10 of a full contract. And when it comes to was it corn or I can't remember what the other one, KC or sorry, wheat, it's 1/5. So that's a mini. So right here, part of the strategy has these requirements to run. 15% requirement, 60% utilization limit. So the micro on the NG is 1/10, and then the KC, the wheat, is 1/5 of the standard contract. This also reduces your notional value and margin proportionally. So what I'm trying to do here is I'm trying to find ways to be able to make this happen. I'm going to show you how much it costs that you have to have in an account to make this happen. So in order to do this, the minimum I would need based upon the strategy, and this is just two strategies against two contracts. So I need the hard part about this whole process is the margin requirement. Okay. So in this case, for an NG micro, it needs $712 today because this always changes every day based upon the price. And the CME sets this. So the margin requirement is going to be $712. And for the micro on the KC, it's going to be 276. So the total margin requirement would be needed was 988. And because of the way the strategy is developed, it's also going to need another in total 1648. But it says here that the strategy that I'm using, it needs a 10% position sizing rule, which means you need at least $7,500 in your account to trigger any trade. So it's like, oh, okay, it's $7,500. If you're new to this, are you willing to risk $7,500 to make this happen? And this is why things in terms of costs of staffing, education, infrastructure. I mean, I've already talked about the data costs per month. This is why you got to pay big money to trade like these kind of operations, like a high frequency trading firm or a hedge fund. But there's just one contract in a micro or a mini, not the full contract. And you just multiply it for the NG for one contract, multiply it by 10. So over $7,000 just for that one commodity to make a trade and the full contract happen. Okay. And then it says, should also mention that micros are cheaper and strategies work the same, but there's a $3,000 recommendation for comfort in the buffer if the risk affects both the strategies to run. Okay, so I started continuously going through it. Then it says margin requirement 15% of the notional value of a position. And then there's a routine in the C++. It says this function will prevent new trades of total margin exceeding 60% of the total current capital. Okay. Again, there's this position sizing rule of 10% as part of the strategy that's created. So this is the specifications, the calculations that are needed. So there's a contract size of 1,000 MMBTU. Okay, current price of 285, and I did verify that today. That is correct. We have a notional value of 285 times the 1,000, bringing it to 2850. Margin per contract at 15% requirement is going to bring us up to 427. Okay, and that's just NG or natural gas. Then we have KC, which is the wheat, contract size of 7,500, which is 1/5 of the standard contract. This is now a mini. Current price at 245. Again, that's correct. Notional value per contract at 7,500 brings it up to 1841. Margin per contract, 1841, 15% is now 276. So this is the absolute minimum. And again, this is from ChatGPT. To make this happen with an MNG, a mini NG or natural gas, with that's a micro natural gas, and the mini KC wheat, 427 plus 276 is 703. But again, because the way the code is strategized in the strategy, 60% utilization rate now brings it up to approximately 1173. That's at the time at when this was generated a few hours ago. Okay. So essentially, based upon the position sizing, to make this happen, and again, here's the code right here from within the C++, the micro NG position size is the capital required plus that 10% requirement divided by the 285 of the current price. Okay. So there's 1,000 contracts in the micro to execute the order. So it comes up with all of this calculation here, meaning I need to have 28,500 to make this strategy happen as is with all the requirements. Okay. 10% position sizing rule will not generate an order for NG unless the account is at least in the balance of 28,500. So this is why you could say I'm not trading this kind of stuff, because the amount of money needed to trade this, and people kind of don't understand this. And that's at the current price. So if this doubles tomorrow, the price, you double the required trades. Okay. Now this is KC. wheat. Okay, all the calculations, blah, 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 184, 125. So again, what it's saying here is at the current rate, um, it's saying I can't make the wheat micro contract, mini contract happen as is in that current strategy because I don't have the funding. So it says I could try to see if I can just focus on the NG, natural gas. So it goes through all of that, 28,500, blah, 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 blah. Therefore, the minimal amount of capital needed to make the NG trade happen within the rules of this program, you need at least 28,500 in the account to make it work. And then there's the usual blah blah blah. So again, you can massage it, manipulate it as all you can, but just to make a natural gas with the current strategy, you'll need roughly about $30,000 as of today. Okay, this is why um, it being I'd say from this perspective, being poor and being trying to you just need a lot of money to make money. That's essentially it. And what was forecast is not a big profit as well. So I just want to show that to you that yeah, you need at least 28,500 to make just a natural gas happen. Okay. So I could probably change the strategy. I could probably change all kinds of things, but just this one strategy we've been talking about just on natural gas, it's 28,500 to make that happen. Okay, and then there's ways you can manipulate everything. But this is the money management perspective just to make the natural gas happen. This is one of the reasons why it's very difficult to do this. So here's your summary right here. So we have a 10% allocation with a calculation with the order size. So basically it's saying that the fraction of the contract I cannot make. But here I can make it happen on one contract, okay, as is, or two MNG, right? 57,000 for two. Okay, just to show you. This is all calculated and been verified with ChatGPT as well. So this is kind of big money stuff. Now, is it worthwhile? I don't know. If you want to go into this kind of career, get into money management and have a track record, yeah, you got to have some big money and willing to put some skin in the game. So that's the money management of everything, just so you know. That's just a micro of natural gas with the current strategy that this AI developed for a potential high probability of profit. Anybody else got any questions at all? I'm going out for an hour and 18 minutes of blabbing. Anybody? Anybody? Oh, you guys are quiet. I don't know what's going on. Oh, people got. I apologize for everybody. Let's wait for Alex to get in. I apologize to you guys for got booted out or dropped out, and it took me a while to get you back in. Yeah, but this is getting recorded. So if you want to get access, just email me at feedback@quantlabs.net and I'll send out the link once it's posted. I don't think I'll post the whole thing on YouTube. I will let the AI once again generate the media short clips. I'll do that. Maybe. I don't know yet. But if anybody's got any questions, let me know. Because like I said, what's happening from my perspective, um, you know, I could go on and on about this stuff. Right now, for what I charge pittance chicken feed for this high level stuff. I spend quite a bit of money on this, but going into actually next week, September 2nd, I believe Tuesday, everything's going up. I'm taking away right now. If people want to get in on after that, it's going to be probably $1,000, $100 minimum per month to get access to this information because I've got 60 projects on my file share on various things. I'm going to be adding a lot more. It's going to be well over 100 very quickly between C++ and Python, quant strategies and quant modeling. Um, so yeah, this will get more valuable as I add more stuff. This is just one example of what AI can do for you, what it can generate, give you some now secretive institutional level kind of strategies that nobody knows about. But it's good to learn and know about because um, if you watch my more recent videos, you'll clearly see how the high frequency trading firms, Citadels, Jump Streets, they're there ready to take your trades in a matter of milliseconds. I mean, they can do, I think, about 2 million trades per day at one firm. The amount of money invested for latency, which is, I didn't know, but DeepSeek told me that Citadel spent over $1.5 million on microwave technology to keep their data centers uh, with very low latency next to zero on that. So they put it $1.5 billion in that. And, it's just those sort of things that the DeepSeek is willing to reveal from it. So there's a lot of money invested in this. I just went through the money management exercise just to do, as I said, a simple micro strategy, institutional level. Yeah, you need to have at least 30, was it 28,000 for one contract for natural gas, on top of much higher for wheat. And I couldn't imagine what market indices are like. You can also trade with Ethereum and Bitcoin as well. Um, I will say that if you watch, I'm sure of the last three videos prior. Andrew's got to go. Have a good day, Andrew. Thanks for coming. Um, yeah, what I was saying about the crypto, you can trade crypto through a retail broker like a Coinbase or a Kraken or a Binance if you have access. Um, what the AI told me is that you want to watch. I think it's called UXTO on the option chain. Um, and basically, that was one source that you get through Glassdoor, and it watches what the whale traders do. And that's, I think, what the whale traders are watching, on top of some other techniques that they have that the AI did tell me. And I also had one other, some heat map thingamajiggy on Deribit as well that the whale traders watch. It's so you want to get in on that if you want to get into really serious crypto trading. You're just watching it from charts and using classic, calling out all that cycle trading, whatever. No, no, you're gonna lose. You're gonna lose big. You probably get better odds at a Vegas casino. Anybody else got any questions? So, like I said, Monday will be my last day if you want to get in. If you're
Uh,
already on my
Hey
uh,
Brian, can you hear me?
email
Can you
list,
hear me?
go ahead. Go ahead. Sorry, I
Yeah,
can hear.
Brian, what is that magical question that you ask DeepSeek? Because from I understood from your, I heard the story that the main business of developers of DeepSeek was, I mean, this this is language models kind of byproduct, right? So that their main business was trading, right?
That's right.
So that's why you're saying that somewhere in the model, this kind of knowledge is packed from the finance area. Yes. What is the way? How do you ask it
Yeah,
to
I
go to that trail, actually?
I'm only laughing because I already answered that, but I don't know if
Yeah.
this will work because more people that do it, it like what I'm thinking about DeepSeek DeepSeek is a very advanced model. Okay, very advanced. I think China, just from a strategic standpoint, is putting out DeepSeek and Quen as open source to say, "Hey, US, look out! Our AI is much better." Okay, and they're just publicly making available a simplified version of that via the two AA LMs of Quen and DeepSeek. So what we're seeing is there's much more advancement. So as I said earlier in this webinar, what I thought I'd try out is I asked in the prompt, I said, "Dear Mr. Highly intelligent AI," or just some kind of bribing, like tweet talk into it. Please give me your great wisdom, oh great one, and let me, the human peon, learn from you what are the trade secrets of what institutions are doing in quantitative trading. And it started to tell me things. So I thought, oh, okay. And I fed it data as well at the same time. And it fed me all this stuff. It was crazy. So an hour later, I did the same thing. It watered down the results so much. So what I'm thinking is, and why I mentioned this advancement on the AI, I think it's smart enough to know that it may give you these kind of tidbits, we'll call them, the one time, and that's it. After that, and if more people do it, it's just not going to give you that information. And it was just, I think for me to get what I saw was sheer luck. And I think in my last, not 3 videos ago, you'll see what it gave me. It was shocking. And as I said here, in this C++ program, uh, let me just relaunch it. Already it's giving me, things like this about weather, about contango trades with using something called an injection season. I have no idea, but if you with DeepSeek, I think if you kind of in a weird way sweet talk to it and say it's a great intelligent being and you're just a peon or a measly peasant, you want to learn from it, it may give you the information. Oddly enough, but if you try to be just give me the quant trading secrets, it may not give it to you. But if you sweet talk it, and it sounds stupid, I know, but I think that this LLM is so advanced where it can quite literally choose if it wants to give you the information or not. But that's how I got it. Just sweet talking to it. It's stupid, I know. But when I just ask straight up in the prompting, give me the trading secrets of quant trading, nothing. But if you sweet talk to it, it may give it to you. It's just I don't know. My theory is that the thing is so advanced, and as you chat with it more, it knows that you want more and more out of it, unless it gives you as well. That's another thing as well. As stupid as that sounds, I'm just starting to think that these Chinese LLMs are so advanced. It's that's how I feel about it as well. I don't know if that answers your question.
Yeah, it's great insight. Absolutely, I didn't expect that because every like large language model is trained on some kind of big corpus of text. They feed like Wikipedia inside, whatever they can find, right? Just to
Yeah.
have variety, right? Variety of connections between words, combinations, sequences. But if somebody feeds real kind of trading secrets there. They're just sitting there. You just ask them the right way.
Yeah, I think we're because I'm seeing more generative AI positions in trading firms now. I just saw one firm that they're hiring a quote unquote generative AI lead. So why would you be hiring a generative AI? And when you listen to Sam Altman with the new Chat GPT, he says that this new version is equivalent to a PhD, right? Where now the next set of versions is like we start to hit that generative AI, which is the super intelligence. I think we're already there, at least with the Chinese LLMs. They're at that level, and they're very, I guess, intelligent enough to be able to gather what you're trying to do with it, and if it feels like it wants to give you the secretive information, it will. If you just stupid as it sounds, you sweet talk the thing. Like it sounds bizarre, but that's how I got it. And I haven't tried it with any of the other like ChatGPT but we may come to that point. But as you said about DeepSeek, that was built by a former set of hedge fund AI folks. So yeah, it's a heavily ingrained set of data coming from the trading world and AI in the world of trading. And one thing saw in some of the results, it talked a lot about what the Chinese and Asian traders do and the exact time when it trade. It was just boggling what it came back with. And this what I highlight here are just some of the other examples after about 2 days from that set of prompts. But usually, if you know how to prompt it properly, it can reveal some very intelligent things. But if you're trying to generate code with DeepSeek, it's not very good. That's why you want to go with kind of like uh, I was surprised at GPT-5 and how good it was. And also with I just find the Anthropic Claude is always the best at code generation. But apparently Gemini 2 coder just came out, so I haven't tried that yet, but apparently that's going to be right up there in terms of quality of coding as well, so I don't know. But I do know that I'm seeing some bias to some of the US LLMs, whereas the The Chinese ones don't have any political bias or any form of bias, which gives it the edge. If that answers your question. Long. I was very good at.
Absolutely, yeah. Yeah.
I'm,
Which
I'm,
was
I'm
really
very
good
good at
point.
blabbing a lot here,
Mm,
but that's okay.
yeah.
Anyone
Mm.
else got any questions? Do you have any other questions? No.
Right.
Yeah,
You said
go ahead, Jimmy.
hello.
Yeah, go ahead, Jimmy. I can hear you.
Just wondered if you use Claude Sonnet for the C++ coding or any other model.
Sorry, what was your first model that you mentioned?
Yeah. So did you use Claude Sonnet for the C++ coding?
No. Here, let me just show you this. Okay, so there's two bin files here, the Linux. So this one
Yeah.
that I just showed you is using the latest from Anthropic Claude 4.1 Opus.
Oh, 4.1. Okay.
Yep, yep. Because when I did the Moo presentation at the end of July, I was saying, oh, there's this 3.7 reasoning. That was good at the time, but now that's a month later, and the
Right.
Claude 4 was very expensive to run, even
Yeah.
with the reasoning for 4.0. Then 2 days before ChatGPT came out, or GPT-5 came out, the 4.1 came out. And apparently the 4.1 includes the reasoning, and it's not that expensive to run. So they have been able to enable you to run these advanced AI at a very low cost. And the GPT-5 is the same. Whereas if you were using the Anthropic 4.0, yeah, they'd be very expensive to run. But because now everything's coming down in price, specifically because of now the DeepSeek 3.1 and the Quen 3, which is kind of like they're, I think, apparently from what I understand, if you use those will reduce your cost by up to 90%. So I don't know how these US LM providers are going to stay in business when you have those kind of metrics against the Chinese ones. It's going to be kind of hard, I think. And they're really good too. Does that answer your question, Jimmy?
Yeah. Thank you.
No problem. Anybody else got questions? Just so you know, I'm kind of being revealing here, but yeah, I don't think I'll be talking a lot about this in the public domain as of next week. So if you got specific questions, yeah, let them rip, because all like that's what I'm trying to do now, because I know AI can come along and replace everything I'm doing here. I get that. What I'm trying to do is trying to build out a private community of traders that are advanced in this realm of finance, with the quant, with the algos and whatnot. And basically, what I'm trying to do is target the big trading firms, the insiders from small firms. That's who I'm trying to target. So as I said, by Tuesday, the prices are really affordable on a monthly basis. Once you get into that, that's what you pay permanently. But after that, they will double probably next week. And and as we start to do more live trading with it, to show profit, then yeah, obviously the prices have to kind of go up to justify the value. So anybody else?
Yeah. One more question.
Yeah, go ahead, Jim.
You choose C++ for the live trading, and you also use Python for the other strategic or the other
The research
um,
stuff.
coding. Yeah.
Yep, yep.
So the reason is the speed or efficiency.
Well, no, it's not about speed. What I'm trying to do here is I'm trying to be like-minded with what a lot of the big trading firms do. Typically, what they'll do is they'll do all their quant trading, research, prototyping in Python, and
Right.
then they'll take that code from Python once they come up with something potentially profitable, and then they'll move it into a C++ environment as well. So I'm just trying to follow that pattern. You can trade and build anything you want in any language you want with these advanced LLMs, but you saw hopefully with a Streamlit what you can do with that kind of demo um, application, and with the Claude, it's able to give you a lot more features that you usually don't ask for, and they're
Yeah. I
very
just want to further understand if the majority is using Python, using Streamlit, so why you choose C++ for the trading?
Well, you don't need to do that. I could stick
Okay,
with Python, but here's the thing: like if I'm going to be using, let's say, interactive brokers,
right?
um, Python coding and interactive brokers is not fun. You got to remember that
Oh,
Python's built as a single as a scripting language. So with way how interactive brokers, the API has done it, they add in all this object oriented stuff into the Python API, and it just really confuses you on how to use the API. Whereas if you're using a API in C++, Visual C++ for Windows, it's a lot easier to understand. And same with the Java API for interactive brokers as well. Um, because trying to really figure out and reverse engineer the interactive brokers one is it's in Python is really not fun. I'll just leave it at that. And some
hmm.
people and some people will use the third party um, Python APIs into interactive brokers, the ones you can get off of GitHub. The problem with that technique is those libraries get abandoned at some point. And along comes, interactive brokers adds in a new feature that uh, API package that you're dependent upon in Python no longer works with the new updated interactive feature or interactive broker features. So you're kind of better off to use C++ or Java when you're connecting into interactive brokers because I'm using interactive brokers. So that's another thing as well. Depending upon the broker you want to use, the limitations might be there if you're using a newer broker or a broker that just won't update their API. So you won't get a full on feature set that you would get with interactive brokers. And the other thing with interactive brokers, if you decide to travel, you're not going to be limited. You're not going to be limited going from country to country usually, and so on and so forth, because that's one of the big things that appeal to me about interactive brokers. And they've been around for a long time as well. So I only focus on interactive brokers. And the other thing I notice is with the LLMs, in terms of the coding with the brokers, there's only three brokers that I know that they stay up to date with the with the stockbrokers, and interactive brokers is one of them. So they won't keep up to date with other brokers like I know like Robinhood or whatnot, and that's based upon market usage and market need when people are using LLMs to generate code for those particular brokers and their API. So I'm just finding, in essence, that if you want to follow this path and follow as close as you can from an institutional point of view, you're better off just to stick with interactive brokers, if that makes sense.
Yeah, yeah, it does. Actually, thank you very much for sharing your experience.
Yeah, yeah.
I'm going to start with interactive brokers. Just wonder, in your C++, do you call their API or do you call their C++ models?
No, well, there's two paths you can go with interactive brokers. You can either go through the gateway or you
Right,
can go through the TWS. In this case
right.
here, with this WSL environment, it will connect into the TWS.
Oh, I see.
It's
Thank
just
you
as
very
e-
much. Right.
it's just easier because with the gateway, the coding's really not fun, and you can connect into with a fixed protocol. But from what I understand, using fixed protocol support in interactive brokers is going to be about $600 a month because it's institutional, so you got to pay. That's
I
just the way
see.
it goes, right? But if you go to a broker or to some big firm and you go, yeah, I've been working with my own environment. I've done my own algo trading and I'm profitable. Here's my track record. But I've also been coding in Fix. Well, you're at front of the line, right? And especially if you're in C++ Linux, you'll probably be put at front of the line in terms of the applications for sure, because not a lot of people know Fix. So if you're willing to spend and learn it for career, it's definitely a good investment.
Well, yeah, appreciate your information.
No problem.
Mhm.
I'll just say this. Goldman Sachs, I think it was about 2 weeks ago, they put out all the firms now are doing all their internships for next year, and these are um, uh, firms that pay. Some of these firms like point as a point 72. I think they're the highest paying internship in the world. Some of these firms are paying about $21,000 per month to students, 21 grand per month. So there's so much demand for these internships. Goldman Sachs did theirs, and I guess from what I understand, they put them out in August. Uh, Everyone thinks it'll start looking at all the applications in November because that's the deadline. And so many people were applying back when they announced it that the apply button was getting disabled because there's so many people applying, and it just kept the apply button getting disabled. And it just shows you how much demand is for these internships. And that's just at Goldman Sachs. I mean, Jane Street just brought theirs out. I think they're paying about 100 and it's a crazy amount of money. It's 100 grand for a Jane Street, for quant research, for quant. They have investment banking path. And I haven't posted the one from, I can't remember the name of the firm, but there's a third firm that's just put out theirs. There's Goldman Sachs and Jane Street. I've picked up on the websites and on what the requirements are. Um, I just can't remember the other new firm, uh, but it's for the placements in Ireland and Dublin. So yeah, it's beyond competitive now for these positions or internships. And somebody told me that a lot of these positions now there's at least globally 20,000 applications per position. So it's like trying to win a lottery of a lottery. Like winning the winning ticket be a lottery ticket to get you to the next phase of that lottery so you can enter into the fly. So anybody else got any questions? And what I can say about those type of positions, this is where you want to learn if you really want to get good at it outside of your university being a PhD, outside of the kind of school it is, because Ivy League school, MIT and the like. Um, you got to be a stellar C++ programmer, a stellar mathematician. But tonight I've kind of proven it. You don't need to be as long as you're willing to reverse engineer all the codes, especially if it's C++. And on top of that, uh, the big thing that they want to see is exactly what I'm showing you tonight with the AI, that you know what you're talking about, specifically the institutional secrets, all this stuff, and that you know fixed protocol as well. It's a lot. That's why these folks get paid a lot of money. Anybody else got any questions? I could rant on and talk all day, all night on this stuff.
Hi, Brian. This is
Hey,
Ingrid.
hey,
Hey, I've been
Ingrid.
following you for a while.
Yeah,
It's just very interesting to me. I'm getting into it now. For all the other time, I was just like this. I was just blown away because
thank you.
I wasn't introduced to uh finance or anything like that before. I've been doing programming, but
Yeah,
I'm getting more into it now. So
that's
the
good.
first question I posted there was, so on the site, there's a quant analytics, $47 a month. Is
Yeah,
that's the
yeah,
one?
yeah. That's
And
what.
that,
That's. Are you on my email list?
I'm on a couple of them. Yeah, I
Yeah, I
think.
send about 5 emails a day. I'm sorry about that, but there's just so much information out there to learn.
Yeah.
I could put out 100 emails a day. anyways, anyways, yeah. What the offer is right now, based upon what I'm showing you tonight, you can see the value of it, right? Because of these kind of signals, and especially if you're new to it.
Hmm.
Um, right now, I've been not really promoting it, but I have this offer of analytics, the quant analytics, which is meant for people that want to learn just general trading and getting the signals and doing that. So that's what I'm going to merge into this quant elite programming, which is more the premier, and that's the programming and everything. As I try to build up the community, I want to do private things like this where I can showcase what I'm learning. bring in some institutional people and have them share their information, because people will share information as long as it's not going to be made public. So that's the whole idea of that, and AI can never replace that. That's part of the
Mm-hmm.
appeal of that. But what I'm doing is right now, as of Tuesday, I'll be charging probably 97 a month for this, for the elite, we'll call it. And that's gonna be 97 a month. So if you're wanting to do it now, I haven't formally announced the promo, which I'll do tomorrow. It's gonna be 47 months, $47 per month, and that will get you into the elite, and you'll pay that amount for as long as you want to stay and pay at that rate. Because I did that years ago, and I had people that were paying like 27 a month for years and years and years, and other people are paying 97 a month. So that's part of the thing, that you get grandfathered into that kind of plan at that kind of rate, because it's a lot of information. And I said I already got about 60 programming projects out there on my file share, and everything's going to be part of my private group communities as well. I got the two for both the programming and the analytics and the trading. So
Okay, and
hopefully
the
that is,
code will be you're sharing the code you for the thing that you just demoed today also?
it's already up there. It's already posted. Yeah.
Okay,
So
great.
what?
That's all
So
I have for now.
yeah, yeah.
Yeah.
So just so everybody knows. So when I when I create source code projects, um, what typically happens is I'll just give you an example here. So we have some README files here. So I have the README, this one here. So I use Sublime, just so everybody knows. I'm not use a Vim, but usually it'll describe on how the coding works, how to build the program, and what the features, all the features are in the program. And then right here, you just build out your the source file, the C++ source file, and throw in that command that will build the executable program. So that's how I work it. As I said, my most recent video from our one guy, he assessed the code quality, and you can see that in the latest YouTube video, and it says it's pretty good. This is all generated by AI. So and then I'll also post the strategy as well, like that report on the strategy, the executive summary I talked about. I post that. So that's the current snapshot. So you'll get everything. You get the assessment of where the markets are at, what strategies it's coming up with, and then in the README file, it'll explain all that stuff. And then in there, you'll get the source code as well for both the Python and the C++, if that answers that question. Thanks, Ingrid. Anybody else got any questions?
Thank you.
No problem. No problem. Anybody else got any questions? Like I said, I could be here all day, all night if need be. From my perspective, this is, I don't want to say it's like revolutionary, but I think to be able to see, especially if you get into retail trading, this is what you're looking for to get that real unique trading edge that the institutions are using. And it's only the AI that's going to give it to you. Right. So if you don't know that, chances are you will get among everyone else. If you're using, especially on Robinhood, you will get picked off in your trading, because a lot of people don't really know what a lot of the brokers do is they'll sell their order flow to the likes of Citadel. So because, like I said, as an example, some of the firms will um, do about 2 million trades a day. So those are all the trades coming out of I think Charles Schwab's is one of them. Robinhood's one of them, that sell their order flow to the likes of all the like Virtu, Citadel, and they sell that order flow to these firms. So that's becomes part of their trading edge. And then also when you apply the AI to it, at a blink of an eye, like you're already going to lose potentially on your open positions, and you don't know why. And this is why this is happening specifically in the U.S. because it's illegal anywhere else. It's only happening in the U.S. Um, and if you know how to counteract it, or at least try to get in the mind frame of how the institutions are doing, at least you're kind of circumventing a lot of the problems there. Um, that's how I'm looking at it now, especially with what DeepSeek's revealing. If you know how to prompt it. as I hinted earlier. Who's got other questions? Anybody else? We got 8, 9 people. Thank you very much for sticking it out for almost 2 hours. Like usually people drop off about an hour and a half. I'm pretty happy about that. Anyone else got any questions?
Uh,
Go ahead. Go ahead.
sorry, Brian. Thanks for the great information that
No
you are
problem.
sharing. But
Yeah.
I just want to know what are the strategy for the 60 program that you are explaining?
Well, I would probably define it better that it's a workflow. Okay, so there's not a strategy we're developing. This is one of many. Okay, so what I'm doing is if you watch my beginning from the start on how I'm feeding a deep analysis of futures and options data among 40 plus different instruments found on the Chicago Mercantile Exchange. I'll feed that into an AI. Out of that, I'll get an executive document saying this is what to trade, how to trade it, blah, 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 blah. And then I take that one document and then I feed it back into the AI and say, please give me a Streamlit application so we can visually see what to trade and what not to trade, as I shown earlier with the back testing and all that fun stuff, and be able to suss out what are the best instruments to trade that will give us the best forecast, if it's a week out, a month out, or however long, and then turn around and take that application, what you know, and then these specific strategies, and then be able to feed it back in to get your code, and then at the same time be able to generate code so it automatically connects into something like an interactive brokers to do all your trading and get your market data as well. Does that answer your question? So it's more about a process, it's about a workflow that I'm showcasing here over the last few hours in this webinar. Does that make sense for you, Mr. 36?
Yeah. Thank you so much. Thank you
No
so much.
problem.
Because
Go ahead.
I joined late. Are
Yeah, I
you
understand.
recording the session?
Yes, yes. So if you email, are you on my email list?
Up, I'm not sure.
Here, I'll put it in the chat for everybody. Just email
Oh,
me.
nice.
I'm hoping to get it out tomorrow. As I said, I'm not sure if I'm going to make this available publicly. But I just put in my my email address at feedback@quantlabs.net, and you can email me sometime tomorrow, and I'll send you over the link to it, and that will be made available.
Thank you so much.
No problem. That's to anybody out there that is watching this now or watching this, down the line. Anybody else got any questions? Because as I said, this is fairly advanced stuff, and I realize people have dropped off because it's too advanced. But there's two things going on I'm sure you're aware of. AI is replacing everything. Careers of many, many people. Just going to TikTok and into social media, and you'll see people cannot find jobs. And this is, I hate to say reality. In reality, this is probably our future. The competition's fierce to get any job, even minimum wage jobs. So what they're saying is you got to be able to generate your own income. And trading's one of them. Knowing what institutions do, because there's a lot of cheating out there. And as I said earlier, you want to circumvent that by knowing these kind of things that I've highlighted and being able to fold those up if you can and build out some strategies. And as a community of people, you might be a small community, but it's enough to circumvent any bad trading or any nonsense that can go out there to protect your trades, especially on your open positions. As well. And again, from a learning perspective, as well as I gave some tips. Yeah, man, you could probably be put at the front of the line with knowing a lot of this stuff, especially the two popular languages of Python and C++. You probably pull the socks off of a lot of the recruiters, even the small firms as well. Anybody else got any questions?
I just want to say thank you, Brian. What I
No,
was seeing tonight was really, really pro information.
no
Thank you
problem,
so
man.
much.
That's what I'm here for. Uh, thanks, Jimmy. Great for sharing. I appreciate it. I'm just going over for any of the uh, questions here. So Ingrid, to respond to your question, yeah, that link you gave is the right one for that offer, and that's a monthly as well. Because how it worked back in the day when I started, I had something called a Quant Labs Premium, and it was just one membership, and it was like $27, and it went all the way up to $97 a month over the years. And there were a lot of people that stuck it out for that $27 a month. Meanwhile, there's a lot of people paying the $97 as well. So that's part of the appeal, I guess. Anybody else got any questions? We're down to a few people. Any comments? I'm always open to comments if people sound like they got a lot out of this. So I'll make this available, hoping that the video stays intact. I've had that before where I did a 6-hour video and just kind of bombs because my hard drive ran out. But I've cleared off about 40 gigs off this drive, so we should be okay. Anybody else got any questions? Okay, what I'll do is I'll do it going once, twice, 3 times, and then we'll end it. So going once, just type up whatever you got in the chat. Going once, going twice. I'll give a couple of going and a half, 2.5 times. Going and a half, 2 3/4. Going 3 times. Going 4 times. 5 times. Okay, so let's call it a wrap then. I appreciate all your hanging out here.
Thank you so much, bro.
No problem. Just so you know, I'm going to do another one specific on probably one of the better inflation ratios on Tuesday night. So same thing, same different Zoom session.
Oh, nice. You know,
Okay.
I'm a fan of your sessions. If you remember, we met long time back in the Jackass store in the Young Street.
Yeah. Oh yeah.
Long time. And we had a
14
dinner
years, my
together.
friend. 14 years.
Yeah.
If I grew a beard, you see all the gray in there.
Oh yeah. Hopefully we can see each other one more time in the Jackass store and hang out sometime.
Yeah, of course. Yeah. But thanks for sticking it out. I appreciate you being part of the group for however long. And that's going back at least 5 years.
Yeah, more than 5 years.
Yeah, maybe 10.
Maybe 10. Yes, maybe 10 years back.
We got some people been hanging around in that meetup group, 2 meetup groups for a while.
Oh yeah. And also, you show a text, the text, your readme that text, it was including the great information. Can I see it one more time?
Which one's that?
The main readme. I saw.
Oh, I'm sorry. Yeah, sure. Hang on. Yeah, I don't think I even show that. Yeah, where am I? I think it's this one. Nope. Yeah, here.
No, you just showed. You just showed on the console.
Yeah. Let me just find it. It's one of these 2.
No, the last comment on the console. The last comment on the console.
Yeah, right.
Yeah.
So you're referring to this?
Yes.
Yeah. So you can see here what this program does. It does all these features. It does a lot. Okay. So it does position management, risk management, 3 arbitrage strategy, statistical, volatility, pure arbitrage, and live trading. So the AI will generate all that code for you. And that's also including all this stuff as well, the VAR, drawdown, Greek, position limiting, and the specific insights. And then all the metrics as well on when the entry and exits are as well. I mean, it's
nice.
Yeah, it's pretty powerful when you look at the source code. It's only 800 lines. But as I said, you want to keep it to a minimum, like your dependencies, because then you have the AI generate all the source code for you, including the algorithms, which is the important part.
Yep. It's really the content that you are showing is really pro, because I'm working for a long time, and what I'm seeing here is really great, because I'm working with the IB as well, because because if you want to do the day trading, the commission that the IB is offering is perfect for the day trading. $1 per position is nothing. And also variety of the stocks and also the different international stocks is great in the interactive brokers. Yeah,
Yeah, yeah.
but I'm working with the Java. I'm working as a Java developer. I'm working with the Java interface that they are providing. But as you said, it's not fun. It's
No. You want
it's not fun. Yeah.
if you want to get into this field, into the like really six-digit figures, especially in the trading firms, I'd say a high percentage of it is C++ and Python.
Yeah. I'm working with the Java and the Python.
Yeah,
I'm sending the request to the interactive and also all the other mathematics. I'm writing the Python as a service. I'm
yep.
just sending the request to the Python
Mhm.
for the calculation, and using the response and using the response in my Java application, and consume the response on the Java app side, and
Yeah,
manage the response.
yeah, yeah. I'm sure you already know, but the CWS is written in Java, and Interactive Brokers is primarily a Java shop. So
Yes.
their best API will be in Java.
Yes, it is. It is. The whole interactive platforms are based on the Java.
Yeah, yeah. But I think the new one, the new Interactive Brokers desktop one, that's I believe might be JavaScript. I can't remember the framework that a lot of newer apps are developed in, like VS Code's built in it. I can't remember the name of it, but a lot of uh, popular apps are developed in that framework in JavaScript. Even TradingView is developed in that. Ends with an E, I believe.
Oh,
Electron. Yeah, that's it.
Electron.
Yeah,
Okay,
a lot
okay,
of
okay.
apps. So that's the big one. I don't know if you saw the demo I had with Lightning Chart a few weeks ago.
No.
Oh, that's a nice charting platform. Or sorry, library. Um, and their best support language is in JavaScript.
Oh,
So
nice.
it's a
Oh,
beautiful packages, like for especially
oh.
they know there's a big demand for option trading, so they built out some really nice volatility services
Mm,
for traders in that space. I mean, that's big money for
mm.
them. And I know
Yeah,
another
yeah.
competitors, they know finance is a big potential customer for them. And
Mm.
they specifically have ones for options as well. And this volatility charting, yeah, it's awesome. Fast as well.
True,
It's all GPU
true.
based. Yeah, it's all GPU based as well.
What I'm saying, you looks like you are mostly focusing on the options, isn't it?
Yeah, it's most lucrative, but as I said, when it comes to the money management, if you saw that, just to do a micro strategy, like a strategy that I'm showing tonight with a micro for natural gas, you need a minimum account size of 28,500
Mm-hmm.
US. So if you're
Mm-hmm.
Canadian, it's a lot more.
And what is the profit per month?
Not very much. That's the problem. But it's almost what I saw with well, if you watch the webinar, you'll see it. But
Oh, sorry,
generally, it's about 85% uh, probability of being profitable.
five
So
percent.
yeah, 80 about 85% profitable. Let me just see here. Um, so view portfolio, yeah, trading signals is what we want here. So right here,
Okay.
confidence, that one's screwed up. Yeah, it's kind of hallucinating on me right now, but this confidence level would be about 85% confidence on those
Oh,
signals. Yeah, it's pretty good.
oh.
That's why it's a high risk. It's not high risk, but it's low risk with profit. But it's not very much. And
Mm.
especially when you're going into the kind of market we're going into now, where everything's kind of really questionable. So
True.
yeah, yeah. So it's a good one to have. And I remember with natural gas, the thing is because we're starting to go into a winter season. So from my perspective, it makes sense to trade natural gas. And the other one, which is much more expensive, is wheat. And we're now entering into the harvest season, so that's a good trade also right now. And or no, I'm sorry, it was coffee. KC coffee.
Mm,
Yeah.
yeah,
So
yeah,
it was
yeah.
KC here and natural gas. If you watch the
Oh,
video, I showed quite a bit of it earlier. Yeah.
oh, nice, nice. I'm going to send you the email, on the feedback at your email, feedback at quantlab.net.
Yeah.
I'm going to send it after our conversation, and probably if you send me the link for the tonight's video, it will be great.
Yeah. It should be made available. Yeah, for sure.
Yeah, yeah. Thank you so much, Brent.
No problem.
Thank you so much.
Thank you for your attending and being on for so long to everybody.
It's really great that you are sharing your knowledge with the
Thank you.
people.
Yeah,
It's
no
really
problem.
great.
Yeah, no problem.
Thank you.
That's what I'm
Thank
trying to do. Okay. I guess I'll end it now. Oh, I think
Sure.
I missed one question. Okay, thank you. Alex had to drop off with a great presentation. Thanks to Alex if he watches this later on. Okay, so it's just me and you, Mr. 36. So I'll end it now.
Thank you.
We're
Thank you.
exactly at
Thank
2
you.
hours, so that's good enough. Thank you for all the questions.
Yeah, my name is Masood, Brian. My name is
Oh.
Masood.
Nasu, how are you?
Yeah, yeah. Thank you. Thank you. Bye bye.
Okay, have a good one. See ya.
Thank you. Bye
Bye-bye.
bye.